Hey everybody, Jeremy here. Just doing a quick video today. I pulled my back today and just got done with about a 5 hour drive house hunting. So anyways, long story short, I'm a little bit late to the party here for weekly prep. I'm not planning on doing too much this week until after Tuesday's CPI report. And I guess I'll start by showing that. So economic calendar from Forex Factory, CPI data month over month and year over year. This is going to be really important to support any kind of pause that the Federal Reserve might do in the following week, the week of March 19th, the FOMC meeting where Jay Powell and the rest of the FOMC, Federal Reserve, may or may not try to raise 50 basis points instead of 25. That conversation is a big part of why the market kind of freaked out this week and dropped because we got some economic data that basically showed that there might be more support for the Federal Reserve to tighten more than the market expected and had priced in. So prices sold off pretty hard on that. We have gotten a pretty significant bump so far here today, Sunday, in the last about 5 hours of trading since it opened this afternoon at about 3 o'clock. Honestly, at this point, I'm looking at any bullish movement up into these moving averages on the daily chart around maybe 4,000, 4,020, somewhere right in there, as just a bearish retracement. And my base case is probably coming back down and testing this 3,800 level, unless that data coming in on this Tuesday supports a slower rate hike, lower rate hike, or slower pace for the Federal Reserve. So that's kind of the big ticket conversation this week. Watching for that to see what's going on before I really jump in and get excited about anything. But because of this big red weekly candle and increase in volume here on that red candle, the base case has to be lower right now, and any price movement to the upside needs to be looked at skeptically until we start to work back up into the kind of 4,100 area or above. So that's kind of the line in the sand I'm looking at right now. Otherwise, like I said, on the daily chart, looking at this is probably more of a, couple of day relief from that sell-off before coming back down again, assuming that CPI data is disappointing. On crude light, just bouncing over to it real quick. Same kind of thing. We're in a really choppy mess of a range here. There's not really a whole lot to do in terms of trading. If it closes above 78, probably next stop would be a quick trip up to 80, 81, somewhere right in there. But that's a big if right now. So we're going to have to just kind of wait and see on that. Cryptocurrencies getting a nice big push over the weekend here, opened higher on the futures chart on both Ethereum and Bitcoin. So seeing a bit of a pop on that. Again, honestly, not really a trade here. We need to see further development to the upside to be able to confidently say that this dip was shaking out people on the breakdown and not just getting a little bit of a relief before continuation. So waiting on these charts. Gold broke out of a nice little W pattern here. There was nice tight resistance zone there, gave us a nice bottoming W pattern, is breaking out to the upside. I was a little skeptical on this. I am less skeptical on it now that it is gotten above this 50 period moving average. We'll look for a close above that. But on any pullbacks into that level, with a confirmation higher on an intraday chart, that might be worth playing. So kind of watching for any kind of development there. Coming back out to the NASDAQ. NASDAQ, basically same thing as S&P. We're getting a little bit of a rally here. I think it's still a little suspect. We're going to have a lot of economic data this week, and then leading into the Federal Reserve's rate hike decision the following week. So probably not doing much in terms of directional trading, instead leaning towards cash flow plays that have a higher probability of success. And or if you are doing directional positions, just keeping them very short, very tight in terms of stop losses, and looking for maybe bear call spreads, bull call, vertical spreads, things like that have a limited risk associated with it. I'm expecting a lot of volatility this week, so limited risk plays are going to be the playbook for this week. Russell 2000 had a really bad week. A lot of that was due to regional banks after a couple of different banks basically announced bankruptcy. SI, Silvergate Capital, is a cryptocurrency bank that is basically dissolving. And then SIVB is a regional bank that is also just getting crushed. And so because they're part of the Russell 2000, the Russell 2000 had oversized losses this last week. We might see a little bit more reprieve in it, but again, looking at this probably as a bullish retracement, if anything directionally. Other than that, it needs some time to work out. So, best case scenario might be that it pulls back up a little bit, consolidates neutral for a while and cleans that chart up, but there's not really a trade to be had here. It's gotten just absolutely murdered to the downside. We have a little bit of reprieve, but it's suspect. So waiting to see there. And then silver, same kind of thing, still suspect. Looks to me like just one more bullish retracement here that might set up and roll over. Again, will depend on the economic data that we have coming out. And last but not least, the Dow Jones Industrial Average fighting to try to get back up into its consolidation range here. But again, suspect. So really the name of the game this week was heavy, heavy volume on the downside. Pretty much every major index had really big oversized volume for the week and big downside movements that were breaking down and breaking support. So at this point, you have to have a little bit of a lean towards the bears. And again, waiting to see what happens with the economic data for the CPI report coming out on Tuesday, core PPI on Wednesday, and then the following week after that, the FOMC meeting. So those are going to be really, really important to kind of signal where this market wants to go over the next few months. So anyways, hope that helps, guys. I'm going to keep it nice, short, and simple this week. Be safe on any trades you take. Make sure you have stop losses. And as always, just scale in and do lower position sizes. Take less shares on stock trades, less contracts on options trades, and or on options trades, maybe leaning towards that cash flow or limited risk would be my suggestion. So anyways, hopes that helped.